Hello and welcome back. Cybersecurity is one of the spaces that I'm really excited about from an investing perspective, primarily for two reasons. One, as our world becomes more digital, think about cloud apps, online services, and now AI becoming more central. Keeping data safe is only going to become more important. And that means companies that provide cybersecurity tools have a long runway for growth. And secondly, here's the thing about cybersecurity businesses. Once a company adopts one, it's extremely sticky. Usually, the chief security officer won't risk their job by switching to a different provider, migrating all the accounts, logins, and security policies to a new platform is just not that simple. It's complicated, it's expensive, and risky. And that makes the business model of a good cybersecurity player very resilient. So when I find a company that is growing well and is available at a reasonable valuation, I pay close attention. And once in a while, I might buy a company. And today I want to talk about one such company that I recently purchased shares in. And in this video, I'm going to explain exactly what this company does, why it's considered sticky, and what the growth potential looks like. So let's do a deep dive on Okta today. And by the end of this video, you'll understand what Okta does and why it could be one of the most interesting companies in the cybersecurity space. If you are excited about this video, please do consider liking it and subscribing to the channel for more such deep dives. Before we begin, a quick disclaimer that this is not financial advice. Please do your own research before investing. So what does Okta do? Think of Okta as a digital gatekeeper. Every time an employee logs into a company's computer or a customer signs into an app or a website, Okta checks, are you really who you say you are? It provides a kind of a digital key, and only if the key matches, the person is allowed access. So Okta has two main jobs. One, for employees, it simplifies life by letting them access all the company tools with just one login from anywhere. For customers, it keeps their accounts safe and secure when they log in to apps or services. Now, these might seem like simple tasks, but they're essential. If a company gets this wrong, it can be a huge problem. Lost data, downtime, or even big financial losses. So let's talk about what makes Okta's business special. The first thing being long-term contracts and recurring revenues. Okta earns most of its revenue from subscriptions. So that means that this revenue is recurring in nature year after year. In the most recent quarter, the subscription revenues actually grew by 13%. The second is high value enterprise customers. There are close to 5,000 customers paying over $100,000 per year. Now, these large accounts are less likely to switch because of the costs and the risks that are huge. Third, looking at the performance obligations and backlog, Okta's remaining performance obligations, or RPO in short, are about $4.2 billion, and the portion expected in the next 12 months is about $2.2 billion. So this shows the future revenue is already secured. And finally, scale and network effects. Okta serves close to 19,000 customers globally, and over a billion unique users rely on its platform monthly. With this scale, it gains data, feedback, and efficiencies that smaller competitors cannot match. So all these factors make Okta's revenue really sticky. Switching away isn't easy, and that gives the company stability even as it keeps growing. So how is Okta performing? Let's take a quick look at the most recent quarter of Q2 2026. Okta generated about $728 million in revenue, and this is up roughly 13% compared to the same quarter last year. That might not sound huge compared to other tech giants, but remember, Okta isn't just selling software once. Most of this revenue is subscription based, meaning it comes in year after year. Once a company starts using Okta, it usually sticks, and that makes the business more predictable than a typical high growth startup. The cost of that revenue rose in high single digits to about $168 million, which gives us a gross profit of $560 million, which is a massive 77% gross margins. The one thing I really like about this stock is how their gross margins are inching higher, even if slightly, year over year. If you look at the FY21 gross margins, they were around 73%, and in the latest quarter, it's closer to 77%. Let's look at the operating expenses, and this is where Okta really shines. R&D expenses went down from 164 million to about 160 million. Sales and marketing went up just a bit from 238 million to 246 million. That's roughly 3% increase. And general and admin costs went up by a few percentage points from 108 to 113 million. So overall, operating expenses went up by just 2.5% to $519 million. So they've done a phenomenal job in controlling costs. So that brings us to an operating profit of $41 million compared to the operating loss last year. In fact, they have been generating operating profits for the last 3 consecutive quarters, and that is what gets me excited. Now let's quickly talk about the market opportunity. The market for identity and access management is massive. According to some estimates, the total market is close to $80 billion. Okta currently has about 3% penetration of this market. That's right. Even though it's a leader in the identity and access management space, it's only scratching the surface. Imagine this company is leading the market and still has about 3% market share. So it still has about 97% left to grow. And that is what makes the long-term opportunity with Okta so exciting. And Okta isn't just growing revenues, it's also expanding its footprint across different businesses: hospitals, banks, tech companies, government agencies. But of course, no company is without risks. And from Okta's perspective, we could look at a few factors that could potentially be headwind for Okta. One is spending slowdowns. If the companies that are facing economic uncertainty and cut budgets, then security projects might get postponed, and that could slow Okta's growth, at least temporarily. I don't see this company having a long-term slowdown. From a competition perspective, Microsoft's Active Directory is a direct competitor, and Microsoft can offer its bundled solution at a lower price. So if Okta loses a few big customers or fails to land new ones, growth could stall. Now, I used to work at an organization that had Office 365, but they did use Okta from an identity and access management solution. So that speaks to the effectiveness of Okta's solution, even in a Microsoft environment. The next is leadership changes. Okta has seen turnover in its executive team in recent years. While new leadership can bring fresh ideas, too much change can create uncertainty and even worry some investors. So in conclusion, Okta may not be a household name, but it protects millions of users every day. Its sticky business model, strong growth, and a large market opportunity make it a compelling story. For investors like me, companies that are growing, that are sticky, and that have room to capture a massive market are exactly the kinds of opportunities I like. Now, I want to hear from you. Do you see Okta as a promising growth story, or would you rather invest in a different cybersecurity firm? Please let me know in the comments below. And as you know, as I respond to each and every single comment. Also, I wanted to update my community that I've recently invested in the trade desk. And right now it's about 5% of my portfolio. I have created a video about the trade desk and why the stock fell after the recent earnings. If you haven't checked that video out, I will put a link in the description, and I'll also attach a link here. Do check that video out. And until next time, stay data driven.